Let's talk house prices in 2025.
Yeah.
As a nation, we are obsessed with house prices, but predicting house prices is a little like predicting the British weather. You never really know what might happen, but we are going to try regardless. So then, here is my comprehensive analysis of the key factors that are likely to influence house prices in 2025. But first, let's do a brief recap of last year. 2024 ended a little bit more positive compared to 2023, as house prices grew by 4.7%, taking the average house price to just shy of £270,000. These figures are based on Nationwide's house price index for December. Now let's talk about what might happen to house prices in 2025. To assess that, we're going to look at the key events and policy changes that might impact the house prices in 2025. The first major change coming in is the changes to the stamp duty threshold. From April, the value threshold at which the stamp duty starts to be charged will halve from the current £250,000 to £125,000. And for first-time buyers, the threshold will decrease from £425,000 to £300,000, costing the average first-time buyer an extra £6,250. This, combined with the changes that have already come into effect for second home buyers, will likely put downward pressure on house prices, especially in the second half of the year. However, affordability of buyers will likely increase in 2025. A key factor having a major impact on the affordability of home buyers is the wage growth over the last couple of years. According to Zoopla, wage growth has outstripped house price growth over the last 2 years. The average house price in 2024 was 6.5 times average income. To put this into perspective, during the pandemic, average house prices were over 7 times the average income. Rising wages are also having a positive impact on mortgage repayments as a percentage of take-home pay. According to Halifax, in 2024, mortgage repayments as a percentage of take-home pay reduced from 33% to 29% in 2024. To explain what this means, say for instance, the average wage is £1,000 a month. If mortgage repayments only account for 29% of average take-home pay, it would mean that the average person would spend £290 of their paycheck on servicing their mortgage. However, in 2023, you would have spent 33% or £330 of your paycheck on servicing your mortgage, making you £40 better off each month in 2024. Putting more money in your pocket and increasing your affordability. Another key factor that could boost affordability further is cuts in interest rates. As I spoke in my last video, interest rates are likely to fall faster this year, given the forecast for low economic growth. If, as the big banks predict, interest rates fall faster than expected, then we could, by the third quarter of this year, have interest rates starting with a 3 in front of them. This will likely boost affordability for buyers and is likely to put upward pressure on house prices. Finally, there are rumours that the government is looking at easing mortgage regulations to allow people to borrow more. The government is looking to ease the strict mortgage regulations that came into force following the 2008 financial crisis. Currently, lenders can only allocate 15% of the total mortgage lending to individuals borrowing more than 4.5 times their annual income. Proposed changes aim to relax this cap, potentially allowing more borrowers to access higher loan amounts. Additionally, the government is also exploring adjustments to affordability assessments, such as incorporating rental payment history to facilitate easier mortgage access for first-time buyers. These potential regulatory changes could significantly influence housing demand and house prices in 2025. The Financial Conduct Authority says if mortgage regulations were eased, it could increase the number of first-time buyers by 24% and overall buyer numbers by 20%. This could significantly increase house prices in 2025. So what are the experts saying? Zoopla predicts a 2.5% rise in UK house prices for 2025 thanks to falling mortgage rates and rising incomes. Rightmove is a bit more optimistic, expecting a 4% jump in asking prices. Savills, on the other hand, says that the growth will be stronger in the north at 5% and a little bit more moderate in the south at 2.5%. So what's the key takeaway from all of this? House prices in 2025 are likely to keep climbing, especially as affordability improves thanks to wage growth, low mortgage rates, and relaxed lending rules if they come into effect. That said, stamp duty changes could slow down the market in the second half of the year. What do you think? Are house prices likely to rise in 2025, or will affordability challenges keep things in check? Drop your thoughts in the comments below, and if you found this video helpful, please don't forget to like, subscribe, and hit that bell icon. See you in the next one. Thank you.